Hey everyone, how's it going? It is October 19th at 1 p.m. We just got the closing bell. So let's take a look on how we ended the day. All right, over here in the S&P, we can see we're down. This blue line is where we closed yesterday. I drew that myself, so as a reference. And you can see we had a really choppy day. We were more muted until we got to 9 o'clock when I told you guys, hey, watch out. Powell is going to be speaking and that will introduce volatility. And it did a crazy amount of volatility. We started to quiet down maybe an hour later and then start to get a little bit more normal towards looks like 10:30 over here or 1:30. So after a lot of traders came back from lunch then consolidate a little bit, and then decided to go down further in the last hour and a half to hour of the trading session. So overall, a directional move, but lots of chop, lots of movement both up and down. So lots of uncertainty. So what we definitely want to do is look at where money flowed in and out of today. Before we do that, let's take a look at our day trades or our day trading picks, see how you might have navigated those. So NVIDIA came up, kind of mostly bounced around in this upper region. We did poke above a few times. Those were really fast and very volatile, but I would have not traded until after 9 a.m. That's what I was suggesting in the morning, or at least not in between are only in between 7 or 7:30 and 8:30. So you could have caught over here, just wasn't really that volatile. But after Powell spoke, after 9 a.m., after we got this big dip and then back into this consolidated region and then moved downwards, this is where you could have made some money in NVIDIA today. American Airlines, if we look after 9, it was just very slow and steady movement downwards. So all of the action was before Powell spoke. And then if we look at Tesla, oops, Tesla came and approached in between these two lines right here before trading downwards and then going sideways, trading pretty steadily downwards throughout the day. Not a lot of good opportunities in Tesla unless you were looking at very fine minute by minute changes. So in terms of volatility, in terms of these price levels, supply and demand, it wouldn't have given you a lot of opportunity. But unless you were looking at something like Bookmap and had level 3 or level 4 order information. But in terms of the pre-market data, that wasn't too helpful for Tesla today. Google looks a lot like the S&P, where it just waved up and down all over the place. But the best opportunities were again right here, around 10:30 to 11 o'clock, a very nice wave downwards. So you would have seen it come up, bounce off of this blue line, and come down over here. All right. So our focus the last couple of days, though, has been less on the day trading and a reversion back to the swing trading because we're starting to get into a more friendly environment for this swing trading. And the way that we're doing that, though, is very heavily sector focused. So I want to see today what happened in sectors. And we'll start with, especially in the last 2 weeks, 1 week, and today. Right. So let's take a look at 2 weeks. Energy's leading, utilities are up, communications went up, retail is still up because a couple of days ago. So we had to move way up in communications. They were strong at the beginning when we had conflict starting in the Middle East, and now they're strong again. So we'll take a look at that. Same on the 1 week basis. Communications and tech are up here. That's really interesting. And then if we look on a 1 day basis, everything is down. Communications was flat. Even energy is down a little bit, but everything is down today. So across the board, we're seeing weakness inside, money moving out of every single sector. but communications was flat. So we want to see why communications, because that's a little unexpected, because if we have weakness in the market, why would we have strength in one of the most speculative sectors? So the most likely answer is earnings. So if we go over here and look at our communication sector and look at the top performers for today and see Netflix is up 16%, AT&T is up 6.5%, Match is up 2%. So really it's these two, Netflix and AT&T were up enough to make up for all these other ones that are down. So Netflix for sure had earnings. We knew that this morning. And they are up huge. They gapped way, way, way up. They gapped up to that MA50, closed right at the MA50. So Netflix is going to be a really interesting one to watch. Can it move upwards, or is it going to fill this gap in the next coming days? And given the weakness inside the overall markets, our expectation should be that it's most likely going to start filling this gap. So a Netflix short might be an interesting idea. If you look at AT&T, they also had earnings today. They also gapped up. They gapped up to MA 150 and weren't able to break above it. So same thing. Most likely they're going to come and fill this gap over the next few days. And of course, AT&T is not really a volatile stock. They don't move a huge amount, not like Netflix can move quite a bit. So we would just expect this to quietly and slowly move to fill the gap in AT&T. So I guess if I were to compare the two, if I was going to buy just an option and say, hey, let's buy a put, I would buy the put in Netflix. If I wanted to do a vertical and do more of a income style trading where I know exactly how much money I can make, exactly how much money I can lose, and exactly when it would happen, then I would do it in AT&T because that would be smoother and more reliable. Because Netflix could pop down, they could pop back up, it could go all over the place and give my income style trade a lot of trouble. But if I go into AT&T, it would most likely be much steadier. You can see how steady and smooth this price action is, nice and easy to look and track its motion and its trend. If I look at Netflix, it also has nice trends, but it has these huge bars every once in a while. A huge green bar, flat, huge red bar, flat, huge green bar, a cute gap down. So it's much more prone to large swings in prices. So that type of thing can give a vertical a lot of trouble. Okay, so now we've kind of explained XLC. Now that we know that was just a couple of companies that reported earnings, we're not going to believe in the strength in the communications. So I'm just going to completely ignore this. Energies look like they're the only ones that still are in any position for us to consider in terms of strength. XLU, let's take a quick look. It didn't break out, it consolidated and started to move down. XLP, still above its EMA 8, but won't be surprised if we break below it tomorrow. And then we are also looking at XLRE. That broke down. That's what the expected direction we were talking about yesterday, where we could look at a strong stock and a weak stock, but we had a directional bias towards the downside, and we got an extreme move today to previous lows. So if you had chosen a strong stock and a weak stock, what you can expect is that weak stock made an extreme move, much more extreme than the strong stock, and that would be a big separation, and you would just have a nice healthy profit in one day. And since we're over here at a potential support point, we would just consider closing the trade and just have a nice profit overnight. XHB, we said the same thing, but it broke below its MA200, and there's nothing here in recent times. The closest is back in May. We have some horizontal support maybe over here, but that's still quite a distance for it to go. So If I had seen this happen, then what I would do now is I would consider closing my strong stock and then just keep the weak one. Okay, let's see, where else can we look? Let's finish looking at those sectors. Lost my, there we go. Okay. The consumer discretionary very low. That's where we expect it on downward movements, is here at the bottom. Normally you expect it right next to XLK, but XLK is weirdly high today. Maybe up in sympathy with XLC because Netflix, maybe not AT&T, but Netflix it for sure is in XLK. So that's probably why XLK has a huge separation from XLY. So that relationship will most likely correct itself, especially since this movement in XLK is most likely due to just a couple of companies releasing earnings. My expectation is that XLK will move its way back down to XLY, far more likely than XLY moving up next to XLK. So I would be really interested in looking at potential shorts in XLK. It broke below several moving averages today at EMA 8, 20, and MA 50. Let's see how QQQ is looking. Same, right? So same. So XLK is looking really interesting in terms of shorts. Let's take a look at that. Okay, and I want to look in the technology sector. We can see there's a lot of subsectors or industries within computer and tech that can behave very differently, but I'm just going to look at the entire sector as a whole. So I'm looking for things that look weak. So this is sorted on a 6-month basis. So I may want to look shorter term, but let's see how it looks on a 6-month basis first. So Baidu hugely parabolically, extremely parabolically down. That will probably end soon. That's interesting. MTD, look how nice and steady is. I can draw a straight line through this. So this is actually a really great candidate for something like 1% extrinsic value. Etsy is looking very good. This is a pullback into the EMA, maybe MA 50, and then looking like it's bouncing back down. Let's take a look at MTD and Etsy. Earnings are far away. This is a great candidate for income style verticals, or even a nice, slow, steady 1% extrinsic value. And then if I look at Etsy, Etsy is, let's see, closed at 65.41. The EMA 8 is 65.98, and the EMA 20 is 65.58. So we close below all of our moving averages. Yeah, we're below all of our moving averages. We have almost a perfect rainbow down, and all it takes is another day downwards, and that EMA 8 will cross down as well. Earnings are November 1st, so roughly 2 weeks away. You could do a quick trade, holding no more than 3 to 5 trading sessions, so basically a week, and seeing if this will break below, or it is below, but just further break down below, especially these lows right here, for a quick move downwards. If you wanted to go with the safer, but maybe a little bit less lucrative trade, that would be MTD. All right, so MTD pulled back to its EMA 8 today, but traded back down. So 1% extrinsic value on MTD would be a great trade, or an income vertical, like I said. or Etsy. Let me try to do all just for tracking purposes. I will put both in. So I'm going to go long a put MTD. All right. MTD. Yes. Wow, that's over $1,000 stock. Okay, that probably has very expensive options. So, but we'll do it just for the exercise of it. Or you can paper trade it, just so you'd see how it might perform. If I do it 1% extrinsic value style, especially since it doesn't have weekly options, I could do it for 1 month. Or let's do 3 months. Let's do a nice 3 month. It's super expensive stock anyways, so I'm not trying to make this example something that someone might actually try to trade. So why not? It's already super expensive. Let's go ahead. We don't have a lot of strikes to the downside. That's interesting. We can only go down to 1,000. How about if I go to December? Yeah, not enough strikes. So I would have to just do it for 1 month. That makes it less exciting, especially because of a high dollar price. It's a lot more likely that you have a wide bid-ask spread. You see these are like $10 wide. So this is a lot less interesting. So this would disqualify. So we would never trade this in real life. So let's just forget about MTD and take a look at Etsy. So there's several ways that we could play this. I'm just going to do it the easiest way, just buy a simple put, expecting it to come down over the next week or two. Actually, I already said I wouldn't want to hang on to it for more than a week. So let's just do a normal at the money put with 40 to 90 days till expiration. So I could do this December 1st. But I might go to December 15th just for better liquidity. All right, so if I go at the money here, 15-cent spread and 6 open interest. If I go over here, I also have a 15-cent spread, but 1,600 in open interest. So I would pick the extra week. I'm not paying any more for the option, right? It's the same price. Like 40 cents difference. But I get a lot more potential liquidity here. So I prefer this one. So let's go ahead and in option strat, I'm going to take a look at the December 15th 65 strike puts. It's right there, $5.57. Okay, so we'll go ahead and save this. Yeah, save this trade. Okay, so overall, we still have bearishness in the markets. Right? We came down over here in the SPY. We're starting to curve downwards. We went below the MA 150. It's looking very likely like we're going to touch that MA 200. Again, I don't expect to go through the MA 200. So maybe a few more days or a week of downside movement. And then if we look at QQQ, same thing. We might come down, touch this blue line that we drew this morning. IWM, we are down quite even more today. So hitting horizontal support right here. So tomorrow will be critical for small cap stocks. And if small cap stocks keep getting hammered, then that doesn't necessarily reflect anything that will happen in the large cap stocks. Right? It just means that risk appetite is leaving the market, and it might go out of here and into something like a consumer staple in the S&P 500. So the S&P 500 won't necessarily get dragged down. It's just that money will shift into different sectors within the S&P 500. So I wouldn't see this as a leading indicator of what happens in the S&P 500, at least not in the short term. And then we look at the Dow Jones, breaking down below its MA 200. If we get if we get the high below the MA 200, then we can expect some pretty, well, we have this support right here, but beyond that, we can expect that it might have some pretty large movements downwards. So overall, I'd be cautious, especially to the downside. But again, we are still in a somewhat news-driven environment. We're getting farther and farther away from it as we're getting less, it's getting a little more quiet in terms of news. But for now, we are still a little in that heightened volatility state. And you can see that in the VIX. Our VIX is up above this high right here, matching highs over here. So I would just watch that and be careful. Normally, I'd be saying, hey, it's up here. We should be coming down soon. But given where we are in the S&P 500, I think we could go a little bit higher. And then when we hit that MA 200, that would be the time to look at VIX and say, hey, we should come down soon. Maybe we should buy a put in VIX. Okay, so we'll see what happens tomorrow to end out the week. But I would expect flat to down, maybe down to this horizontal support right here. All right, guys, have a wonderful rest of your day, and I will see you in the pre-market session tomorrow.